Okay, so a very good morning to those who've joined us today. My name's Aaron Hill and I'm one of the market analysts here at FP Markets. So a big thank you for taking the time out of your day to be with us. It's great to be back with you guys again, as quite a few traders requested a webinar on the Quasimodo formation. Today's session will be focused on this pattern. In particular, its ability to provide traders with reliable and often reasonably objective support and resistance. I hope I do not disappoint and you leave here with a far more grounded knowledge of the setups framework. Look, guys, I believe, just give me 1 second. Guys, I don't see any chat. Just give me a second, guys. Right, okay, there's nothing in the chat box. Good day. Good day. Excellent, guys, thank you. So look, the chat box is relatively empty, so I assume the welcome slide is visible and you hear me loud and clear. Look, guys, as usual, if not, please let us know and I will see if our support team can get things up and running for you. Okay, look, it would also be good to understand how many of us here actually trade the Quasimodo or the Quasimodo pattern or have looked at it in the past. If you could just ping across yes, no, so I can get an idea of the type of traders. Never heard of it. Cool, excellent. No, wow, okay. Well, for me, guys, it's one of the most objective and easy ways to plot support and resistance. So hopefully you leave here with a better understanding of it. And I think you'll be surprised at how well these levels react, particularly so for instance, support turn resistance and resistance turn support. You'll be very, I think, yeah. Oh, good. We have someone in the, we have someone been back testing it. I hope that's gone well for you. I'm going to comment on some of the back tests I've done during this presentation. So look, guys, as I said, I hope I do not disappoint and you walk away from here with far more knowledgeable in this pattern. Look, as usual, a recording of this presentation will be available either through FP Markets website or on FPM's YouTube channel. Through the website, simply click on resources in the upper menu on the main web page, and under the education column, you'll see the webinars selection. Here you have access to all upcoming webinars in various different languages and information on all the presenters, their trading background and other good stuff like that. And to make life just that little easier, FP Markets support send all attendees an email on how to view the recording shortly after the webinar ends. And look, guys, it's great to see some familiar faces here. It's fantastic. Yeah, so let's kick things off. Look, before I address things, before I address the main topics of today's webinar, I just need to run through the disclaimer on screen. This presentation is intended for general advice only, and none of it should be relied upon as personal investment advice. FP Markets, as you may have already read, do not take into account your investment objectives, financial situation, or particular needs. So look, as I say in every presentation I give, the disclaimer's job is there to say anything discussed or presented here is not investment advice. And you should always do your own due diligence in anything trading and investing. But guys, I hope you're still with me after that mouthful, as I'll get things rolling. Just give me a second, guys. Okay. So what is a Quasimodo pattern? The plan is to address what the Quasimodo pattern is. Guys, look, if it's okay, can I refer to the Quasimodo pattern as a QM going forward? It's just easier for me to keep saying the full term. It just gets a bit monotonous. Look, so in this section, in what is a Quasimodo pattern, I won't go into the specifics of the pattern, but I will leave you with a clear picture of what the pattern looks like, and why I believe it's called a QM. However, I will point out there's also a couple of other labels associated with the structure, which I will also underline in a moment. Many, I'm sure, here are going to find similarities with the QM and Head and Shoulders pattern. However, there are some differences, which I will also touch on shortly. Look, how to correctly apply the Quasimodo pattern. Okay, look, so at this point, I'll demonstrate how a simple to use approach to correctly apply the QM formation to charts. This, for me anyway, works well with both bar charts and candlestick charts. Though I feel, you know, it could work well with other charts too. However, for this presentation, we'll be working with candlestick charts. So I assume most of us here. Good day, Daniel. So look, I assume most of us here understand candlestick charts. Basic technicals like support and resistance, trend lines would be fantastic. And as I said, hopefully you can leave here with a better understanding of this. As I see it, a rather objective way of locating rather, you know, powerful support and resistance. Okay, so using the Quasimodo pattern in trading. This is the point I'm sure most of us are interested in here, and it's understandable. So how do we use this formation to find points of, shall we say, interest on the charts? So yes, it will be at this point I will bring the QM together and show some ways we can use this in trading, including entries and possible exits based on. So when I refer to when I talk about exits, that's obviously, as most traders here will know, that's going to be subjective, trader dependent, right? So my exits will be very different to yours depending on my risk appetite and things like that. So do bear that in mind when I talk about exits and potential entries. And finally, we'll head over to the Q&A. As usual, the floor will be open to, as I say in every webinar, to any questions. Newer traders, please feel free to step forward at this point. There are no silly questions here, as the whole point of these webinars really is to form an interaction. So yeah, as I said, please feel free to step forward at this point, and when we try and get some conversation going. Okay, let's kick things over to the first slide. So what is a Quasimodo pattern? Okay, so the first slide shows the QM pattern in all its artistic beauty. Yes, it does. We have a comment here. It works well with fib retracement. It also works well with Fibonacci expansion and projection levels, which I have a chart on Bitcoin, the recent drop. So I'll be touching on that as well. So look, as I said, the first slide shows the Quasimodo in all its artistic beauty in drawn form, offering both bullish and bearish scenarios in the form of 5 legs. So the first leg is here, second leg is here, third leg, fourth leg, fifth leg. Look, guys, as I said at the beginning of this presentation, this will only be a basic intro. I'm not going to specifics just yet. I will be diving into more detail as we progress. And we have a comment. So Quasimodo is a Head and Shoulders. Most definitely not, Daniel. Most definitely not. I will touch on that very shortly. It's not. I can see why you think it's a Quasimodo. It looks like it, right? It does look like it, but it's not. With the Quasimodo pattern, you'll be in before the Head and Shoulders traders, and you'll probably be you would have reduced risk to break even by the time they've got their breakout signal. So no, it's, in my opinion, it's different. 100% it's different. Okay, so look, the QM is not one of the most popular patterns among the technical community, but is, as far as I've seen, and a number of backtests I've done on this pattern in the past, it's one of the most reliable and, as I've said, powerful patterns to trade. I've been working with this pattern for years now, absolutely years, and it's rarely failed to, you know, deliver. So some years ago, I actually backtested the QM with no other technical tools supporting the pattern. So a lot of you guys will understand what I mean when I say confluence. What I mean is, so when technical tools combine. Here, I just focused purely on Quasimodo patterns, and I found it to give between a 55 to 65% win-loss ratio with an average risk-reward of about 2R. So that's 2 times the risk. Now, some traders here might think a 55 to 65% win-loss ratio is poor, but I can assure you it's not. It's very, very good in trading. Most traders would be happy with a 50% win-loss ratio, and you can do very, very nicely as long as your average gain to loss is in line. As I've already said in the webinar, this will be different for other traders as take profit levels and stop loss placement will of course vary. So let me just say the QM pattern is considered a reversal signal. What I mean by a reversal signal is that it's a configuration that forecasts points on the chart which currency pair, assuming we're trading Forex that is, could reverse direction. Now, when I say reversal signal, I'm not referring to a trend reversal, but they do very well with that as well. But what I mostly look for is buy the dips and sell the rallies. If you see a QM forming at them points, you've got a nice setup with the trend. It's fantastic, in my opinion. So although its formation may appear somewhat complex to newer traders, hopefully you'll see by the end of this webinar it's relatively straightforward, and then I believe you'll begin, no, I know you'll begin seeing the patterns everywhere on the charts. So why is it called a Quasimodo pattern? Why is it called a Quasimodo? So where did the name come from? Just to be clear, the QM has also attracted other labels, which is probably why many traders are confused with this pattern. We also have the over and under pattern, and we have what's known as simply a fake out formation. So look, why Quasimodo? Why is it called the Quasimodo? For me, I believe it draws its name from this rather handsome fictional character, Quasimodo, shown on the slide, who is also the main character of the novel The Hunchback of Notre Dame. So when you were kids, I'm sure most of us have seen this character or know of this character. Yeah, so that's where it comes from, as far as I'm aware. I guess you can see some similarities with the bearish Quasimodo pattern and Mr. Quasimodo down here, given his somewhat malformed head and shoulders. For me, though, while I do refer to the pattern as a QM, I always tend to think of it as simply a fake out formation, as if you boil this down, which hopefully you'll see when I touch on the psychology of the pattern, you'll see that's all it is. You can give it all the names you want, but all it really is a fake out formation. That is it, nothing more. And when I say fake out, I'm referring to the head of the bearish Quasimodo pattern, and obviously the head of the bullish Quasimodo pattern. So look, I think that's about it really for this slide. As I said, I just wanted to give you a quick intro to the formation. So I'm going to now jump into specifics, namely how to correctly apply the Quasimodo pattern chart. Guys, I don't see any questions, so I assume you're all following along and it's all okay. We have one question. What time? We have a question. What time frame would you typically look for this? You know, that's going to be trader dependent, Jared. For me, they form fantastically on the higher time frames, particularly the daily time frame, the H4 time frame. But what you can do, which is what I tend to do in my analysis, is you find one on the daily time frame, drill down to the H1 time frame. If you find another one converging with that, so a Quasimodo within a Quasimodo, if you like, these tend to work very well. Look, guys, I will answer these questions as we head. I'm going to head over to the live charts, and guys, if you can prepare some charts you want me to look at, this is completely unscripted. Just pick a few charts and we'll look at them and we'll try and find some Quasimodo formations, and we'll try and merge it all together and find some setups that look particularly appealing. So any questions on the basics of what I've talked about so far before I move on? There shouldn't be, because this is really just simply an intro to what the pattern looks like. No, all good. Okay, thanks guys. Right. Is there one on the weekly? Daniel, keep that. Is there one on the weekly time frame of the Aussie dollar? Can you keep that? Remind me when we get to the Q&A section, and I'll spin over to the charts and we'll look at the AUD. I don't know. I haven't checked that yet. Excellent. Thank you. Okay, let's flip over the slides. Okay, so how do we I must warn you guys, I'm going to go into detail with this. So any questions, I'm going to go into the detail regarding how we apply this formation to charts, and importantly, what is the psychology behind its development. Look, guys, we can't just be you can be a pattern trader, but it's always good to understand the psychology of what's happening on the charts, because it's largely what the charts are. It's psychology, where the stops are, how the bids and how the offers work. And hopefully through this short demonstration, you'll understand there's a lot more to it than just simply looking for the pattern, in my opinion anyway. As I said, stop me if you're not sure. Okay, look. So to demonstrate, I'll focus on the bearish Quasimodo pattern to highlight the key points in drawn form, and then, as I said, we'll switch over to live charts and hunt for some QMs there. So look, to begin with, to be a valid bearish Quasimodo, we require some form of uptrend, right? Most reversal signals do. Most reversal pattern, head and shoulders. Generally, you need. When I say an uptrend, it can just, excuse me, guys. It must be it can even be a lengthy move. A lengthy move. It doesn't have to be a monstrous uptrend. As in the case here, we have an uptrend in drawn form, launched in the shape of higher highs and higher lows. Quite simple stuff. So movements within an uptrend, of course, will attract the likes of breakout buyers, trend traders, and what's known as contrarian traders. I'll explain this in a minute, guys, as we go through. So look, breakout traders tend to buy the breaks of previous highs, right? That's quite simple stuff. They look for the break and they buy on the break, as here. So breakout buyers will be active here, here, and here. We also have what's known as trend traders that, but saying that, trend traders can also use breakout signals as entries as well, just so I don't confuse anybody. But a lot of trend traders, they look to time the dips around these points here, and generally textbook style, they tend to place stops around the previous higher lows. Look, with contrarians, so these are those traders who establish positions that are contrary to the present market sentiment, and therefore, let me just ping that on, and therefore attempt to fade action from areas of resistance around these points. So imagine that there's a resistance level here, a notable resistance level, I might add, around these points. You generally find traders looking to either take profit from their long positions at these points or enter sell positions. Okay, so as per the slide, at current market price, if you will, we just saw the market form a retracement and navigate beneath, excuse me guys, 1 second, and navigate beneath the prior higher low to form a fresh lower low. This movement places the, let me just click that on, this movement places the breakout buyers who bought the peak of the previous high under serious pressure, right? So with most likely liquidating positions. Trend traders who entered on the dip around this area here with protective stop loss orders tucked just below the newly formed higher low. Would have likely reduced risk to break even after forming a fresh higher high. This is very common with trade management. They tend to reduce risk to break even, and hopefully a lot of guys would have also banked some partial profits as we've entered new territory, bullish territory. We formed a breakout. So yeah, the latest move lower, therefore, would have stopped these. So the latest move lower from this point here would have obviously stopped the trend traders that got in here for break even or partial profits, which is pretty frustrating, I suppose, if you're a trend trader. But as most of you will be aware, trend traders tend to have a low win-loss ratio. But however, the trend traders do have, between the average gain and average loss, their average gain is sometimes monstrous. so it makes up for those small losses. Okay, so price then typically forms a pullback as larger traders attempt to fade. This is where it gets a little bit complicated, guys, and please do stop me if you're not sure. I was not sure whether I should include this here, but I think it's really important to understand how the market does work at times. So look, price then typically forms a pullback as larger traders attempt to fade into the stops below the previous higher low, which causes price to print a modest rally. Think of this as simply traders who understand where stops are usually placed and attempt to profit from this. So what they essentially do is set bid orders around this point below this higher low, yes? So bid orders to buy, I might add. As they know, protective stop loss orders, when tripped, I'm talking about the protective stop loss orders when tripped under here, in this case are essentially sell orders and therefore provide, shall we say, fuel for the bids. So the bids need some fuel, right? And so once the bids are tripped in, once these bids, when I say bids, I mean buy orders tripped in, this forms this pullback. Okay. So it's only once price tests the QM left shoulder do we know we have a possible resistance and could see sellers step in from here. So look, guys, this is the ultimate. This is a basic layout of how I see the Quasimodo forming. This is very basic introduction to the psychology behind the pattern, because I always look for, when I first started this, when I first started trading 11 years ago, nearly 12 years now, I was mainly a pattern trader. That's all I look for, patterns. And it was only when my mentor told me you have to really see what's going on behind the chart to actually understand what's being shown. And only when you do that, you'll start gaining a more in-depth feel for the charts and how they move. So where the stops are, where the bids are likely placed, the larger bids, to take on weaker sellers or weaker buyers. When I say weaker buyers or weaker sellers, I mean in this instance here, we have the weak. What they've done is they've shaken out weaker buyers, right? These trend traders have jumped in here, foolishly placed their stops just too tight. And traders know this. It's the same as round numbers, right? I'm sure most of us here are aware of the round numbers. They attract a huge amount of orders. And if anyone follows my analysis, my daily analysis on FP markets, you'll see I do look for them setups regularly into Quasimodo patterns. So we have the round number here, and I look for the Quasimodo to form just below it. Just test this out. Once this is finished, have a look and test this out and see how amazing it really is. Quite amazing how it works and where the stops are placed. You can form a strategy around this, and also use supply and demand as well to try and catch these weak buyers and sellers. Okay, so look, with a brief layout of the psychology forming a bearish QM, which is exactly the same for a bearish QM, I might add, only in reverse. We can clearly see we need 5 legs in order to form a QM, right? So leg 1 is a bullish wave when within the uptrend, followed by a dip. Excuse me, guys. A dip and a subsequent rally to form fresh highs, right? Leg 4 forms the lower low, as we've already discussed in the psychology part, and that's followed by a leg 5 penciling in the pullback, which brings us to I call this the QM left shoulder, and a lot of QM traders, I believe, refer to this as a QM left shoulder. What's important to understand is the QM left shoulder is always drawn from the apex of legs 1 and 2. So remember, this is leg 1, this is leg 2. So the left shoulder line is drawn from the apex of legs 1 and 2 and extended through price action. So you're extending it through this point here, through the head to join here. I will get into more detail about potential entries and how much more defined you can make this once we hit the charts. Okay, I don't see any questions, so that's fantastic. I'll briefly switch over to another point I know that needs highlighted, and that is the difference between the Quasimodo pattern and the head and shoulders top pattern. So we had a question at the beginning of the webinar asking if there's a difference. I hope by this slide here you can see there's a difference. So look, as shown on the slide, a valid head and shoulders, look, I'm sure most of you guys, excuse me guys, 1 second. I'm sure most of us here are aware of what a head and shoulders is. It's one of the most popular patterns. It's one of the first patterns I ever learned. Although I found it very difficult to understand at first, it is one of the first ones traders usually learn because it's so prevalent in the technical community. So look, a valid head and shoulders pattern requires 3 defined peaks: the left shoulder, the head, and the right shoulder. I'm sure most of us know this, which is the key point here is a QM does not require the right shoulder to form a valid pattern. All the QM top requires is a left shoulder, a head, and a lower low, and a subsequent pullback, right, to the QM left shoulder. Another difference between the two patterns, of course, is the neckline of a head and shoulders top. Look, for most head and shoulders traders here, there is a clear difference. Thank you. There is a clear difference, but you'll be surprised. Sorry guys, we had a comment in the question section. There is a clear difference. There is a clear difference, but you'll be surprised at how many do not see this difference, how many do not recognize this difference. And with the Quasimodo, it actually gets you in earlier at a more defined price level, which, as I said, I'll show you on the charts when we head over. So look, the neckline. As most head and shoulders traders here know, we need a neckline, and that's generally best positioned for a head and shoulders top pattern, as you can see on the slide, either horizontally or in an ascending position. This is simply due to the entry trigger, right, of a head and shoulders top being caused by a break of the neckline. And you know, imagine that we have a downward sloping neckline. What you would get with a bearish Quasimodo pattern, the neckline would be down here, and that would make 0 sense in terms of risk management. Your entry would be considerably low. All right, let me give you an example of the head and shoulders here. So if your neckline's going sloping, it's descending, your entry trigger would be around here, and your stops. Typically, traders look for the right shoulder to place their stops, or even more conservatively, they go above the head. It's just, in my opinion, it's just too much of a stop distance. Again, that's just my opinion, guys. Look, if there's any head and shoulders traders that do well with this, fantastic. This is what makes trading so interesting. We all trade differently, and yeah. So as I said, it's a very subjective career, in my opinion. And look, the point is, with the bearish QM, as I've said already in the webinar, comparing these two, the bearish Quasimodo pattern and the head and shoulders top pattern, the bearish QM gets us in quicker. All right, we're in here, and a lot of head and shoulders traders would be looking for, you know, the right shoulder to form at this point, yeah. But we're in here, and we're already down. We're short at this point, and we're looking for the. And imagine that the neckline's here, and we get the break off the neckline, yeah. We're already in. We're already in at this point, and we're already at break even. Well, most of us should be. Our risk should be reduced to break even, and we should have liquidated partial profits. This is before even the head and shoulders have considered their breakout setup here. And you know as well as I do, guys, a lot of breakout traders would need to either see a close, would need to see a retest. So we'd be in much before that with this pattern. We have a question: where do you advise one to put stop loss in the QM pattern? Look, I'll talk about that in a second. Okay, I'm switching over to the live charts right now, so we'll hit any questions you have. So look, excuse me, guys. So hopefully that's all clear, what I've said. It should help once I get to the live charts. So look, using the Quasimodo configuration in trading. So initially, I was going to create a truckload more slides, and I think it's better we head over to the live charts, and so as I said, guys, please feel free to list any charts you want me to look at, any symbols you want me to look at, and we'll go through it together and check out the QM study. Check it out for QM studies. First up, though, I'm going to check out Bitcoin, as I'm sure a lot of traders and investors have been talking about this. And I noted price recently bounced from a Quasimodo support. Guys, if you have the Bitcoin USD chart, the daily time frame, try and look for the QM. There's a QM support. It's just bounced off of it a few days ago. So after that huge descent we've had, it bounced off this QM literally to the pip. It looks like. So please try and find that. And before I switch over, also for any Fibo traders here, we saw price bounced off an interesting projection level, which I'll go over in a minute. But look, guys, look, here I can talk about stops and entry. So ask any questions you feel, but do be aware that these are my own opinions. Please don't take them, as investment advice, because it's not. This is my own opinion. So please do bear that in mind. I can also talk about confluence with other technical tools like the Fibonacci, and also, which I really want to drill home today, is the importance of when a QM support turns into resistance, and then when a Quasimodo resistance turns into support. That's an incredibly powerful setup. That's an incredibly powerful setup. And this is the point, right, guys? This is the point where I want you to fire over as many questions as you can, and we'll address them on the live charts. Okay, so just give me a second, guys, and I'll spin things over to the Quasimodo pattern. Just give me 1 second. Whoops. Okay. Just give me a second, guys. Okay, can you guys just ping yes or no that you can see my charts? That would be great, and then I can hit this this Quasimodo. The Bitcoin. Ah, cool, excellent. Right, so we have the Bitcoin US dollar daily chart. Look, unless you've been hiding under a rock over the past couple of weeks, everyone's heard of Bitcoin dropping like a stone recently. I think it kicked off with Elon Musk with his tweet regarding Bitcoin. I don't know the details, to be honest. I just know it. I believe it kicked off with his tweet, and it's continued. And yeah, so look, guys, so I'm going to draw the QM Quasimodo support on the chart right now, and for me personally, this will be drawn from this point here to this point here, right? Okay, so this for me is a Quasimodo support. I can see your chart, and QM is clearly seen. Excellent. Thank you, guys. That's brilliant. Let me just expand these questions. Right, so look, here, guys, we have a Quasimodo support, and look at the accuracy of this. It's just incredible. And so the QM Quasimodo support. Now, the thing I want to drill home is you can be very, very creative with this. There's also another. Let me just get rid of this so it's clearer. There's also another Quasimodo support within this area, a smaller one, which you could have also traded, which can be drawn from in here in this area. So we form the high, the low, high, low. This is the fake out area, and we rally higher, right? But what it's left us with is a Quasimodo. Oh yeah. So we've got some really cool technical confluence going on here. Also, however, we have I think it's a projection. Just give me a second. Draw on the projection. Look, guys, for me, this is just fantastic confluence. And, Bitcoin's been very difficult for me to analyze technically with a tweet can damage any level. That's very difficult to forecast, right? A tweet, it's impossible for me. But here we can see the Quasimodo support in action with a 1.618% fib projection. Look, guys, I hope you understand this. I hope you can see this. Any questions on this chart, do let me know, and I'll address any. Let me just check, actually, guys. Okay. Right, there's some questions. Give me a second. stops. Okay, let me just get the questions up. Sorry guys, just bear with me a minute. Okay, we have one. Oh, I don't know what's going on with this question thing. Right, I believe we have a question from. So, where do you advise one to put the stop loss in a QM pattern? Look, I can't really advise anyone, but what I can do is I can show you what the textbook way of doing it is. And for me, I always look at this. Most traders look for beyond the head of the Quasimodo. Sorry, the head. So yeah, the head. So we have the right shoulder, the head, and most traders look to position their stops below the head. So for this Quasimodo pattern here, this will be the head, right? So boom, we have the low, high, lower, low, and we rallied higher. And so for many traders, they'll be looking at a really tight stop beyond this area. But as you know, trading's subjective, right, guys? You could look for. Here's a perfect example, right? We have a clear demand area here. For any guys that are into price action, I'm a complete price action. I'm completely obsessed with price action, and I still am to this day, especially the psychology side of the charts. So look, right, I think you get my drift. I'm trying to join that on there. So look, we have a demand there, a relatively clear demand. So some traders here, instead of placing their order, their stops beyond here, conservatively, they could just pop it below this demand, right? This helps protect you from whipsaws, which, you know, Bitcoin is known for whipsaws. So this would help protect you from whipsaws. So look for, excuse me guys, 1 second. So look for your surrounding area. If the QM head is reasonably well placed, you could use the QM head. But if it's not, you can always look for supply and demand, trend lines around that area, and things like this. As I said, you're gonna have to find your own way with this, but there are numbers of ways. If there's a support area here as well, obviously you can tuck the support, the protective stop loss order just below the support. Okay, I hope that answers your question. Let me just get the other question up, and then I'll. Okay. Question from Daniel: do you put orders in, or you wait till it hits the right shoulder? It's always a left shoulder, Daniel, and see how it reacts. Right, that's a very good question. So, do you put orders in, or so I assume when you say orders in, you mean pending orders or limit orders, or you wait till it hits the left shoulder? And yeah, thank you, Daniel. Cool. So look, that's a really good point. So again, this is trader dependent, right? You could use Japanese candlestick signals, the bullish, the shooting star, or hanging man. Some traders prefer to wait for confirmation, right? Some traders prefer to wait for the confirmation to form. Excuse me, guys. Added confirmation. Again, it's totally up to you. What you can do, as I said at the beginning, roughly at the beginning of this presentation, you can also drill down. So for instance, here, let me do it right now. I hope you guys can still see this chart if I drill down to the different times. So we're on a daily right now. I'm going to ping down to the H1. Let me just remove this volume. So this was the reaction, right? This was the reaction from our Quasimodo. I mean, look, guys, look. That is to the pip. These Quasimodo patterns are very, very, very good ways of not forecasting, dare I say that word, applying support and resistance. Because support and resistance, as I'm sure most traders know, is, God, there's so many ways you can apply support and resistance to charts. So many ways. But with this, I love this because it's very simple yet very effective, and that's what most traders want, right? We don't want to complicate things. It's pointless to complicate things with trading. I did do that, and that's why it took me so many years to reach a level where I'm comfortable at. And my mentor always said to me, I remember him telling me, actually, word for word, he said, Aaron, you do realize what you've done is you've just gone around the block, literally around the block. You've just gone from crazy, trying to get as advanced as I could to to understand everything. And he said, what you do is you always come back to the basics, and this really is as basic as you can possibly get. And I just can't understand how not many people know this. And if you do a search for it, there's not many results that come up on good. It's just insane for me because I use it all the time in my daily analysis. So please, guys, check that out and send me over any questions if you want. I'll give you the email at the end if you're unsure of anything. So I'll get back to you with that, with some chart examples if required. So look, just to get back to this point, we have the H1. So look, imagine if we had a smaller bullish Quasimodo formation form here. Fantastic confluence, in my opinion. Fantastic confluence. So you've got a Quasimodo within a Quasimodo. Look, guys, you could even use the, as I said, bullish Quasimodo, bullish candlestick signals. You can look for lower time frame supply and demand, lower time frame support. You know, if that, for instance, if there's if price is dropping down like this and we form, we hit the Quasimodo like that, and we break the previous higher low, excuse me, guys, and then it retests that level. More confluence there. So it's really it's down to the trader. For me personally, I always look at the higher time frames. The higher time frames are king for me. I always want to know where I am on the bigger picture. Always want to know. I hate the fact that I don't know what I'm trading into. I don't know where I'm. You know, it's like driving with no lights, right? That's what I feel like. I'm driving with no lights and no mirrors. I don't know what's going on. So all of a sudden, a big wall could hit. I could hit a big wall, or I could hit a lamppost, and that lamppost is a higher time frame support and resistance. In my opinion, guys, please do let me know your opinions on that sort of thing. Okay, so I hope I answered your question, Daniel. Okay, Daniel, another question from you. Which time frame do you trade? Which time frame you trade the most to look for this pattern? I think I answered that in this question. I always look for the higher time frame patterns to form, and I work from there. So it's a top-down approach, top-down technical approach. So, weekly or daily? Sorry, I didn't see that. So you can even look at the monthly time frame. Look at the monthly time frame. Work your way down. Just work your way down, so you know where you are in the bigger picture. It's more work, but look, guys, if you want to make this into a career, it takes a lot of work. It's not easy. Out of all the traders I know, there are two that are very consistently profitable with this, but they've stuck at it. It takes a lot of determination, willpower, and sacrifice. Hours at the screen. Look, I'm sure you guys know this. I'm just trying to help the newer traders here. I'm sure most of you guys know this, but any newer traders here, I just want you to be aware that this is not going to be a weekend thing. Yes, Daniel, 10,000 hours. Yeah, I remember reading that as I began my course, but it took me longer than that. And you know, you never learn anything. I was talking with my colleague this morning actually, and he asked me how long I've been doing it for. 11 years, but there's still so much. There's still so much, and it's ridiculous. One day you think, yeah, I know quite a lot right now, and then the next day you think, oh my God, there's just so much more to learn. There really is. I'm actually studying the CMT level 3 right now. I'm not sure if any of you guys are aware of that, the Chartered Market Technician, and that is just insane, the amount of knowledge you can get from that course. So I'd highly recommend that, guys, if you really want to really drill into technical analysis that goes so deep. And it's really opened my eyes to the amount of, it's not simply just support and resistance. There is so much that goes into this, so much, from back testing, system trading. It's ridiculous, the amount of knowledge. Yeah, joy to despair is close to in trading, very close, very close. The amount of times I've been banging my head against walls is just incredible in the past, incredible. Okay, any more questions? I believe there was, right, guys, I remember seeing someone ask me about the Aussie dollar on the weekly time frame. Let me just ping the Aussie dollar chart. I haven't looked at my charts for a while at the moment, so just let me, guys, I hope you can see this chart. The Aussie dollar, this is my normal analysis charts. So you asked me on the weekly time frame. Let me just ping down to the weekly. I believe you're going to be referring to a Quasimodo. I'm not sure. I don't really see. What did you mean? Did you mean a Quasimodo support or resistance? Because I don't see one. If you're looking up here, this really isn't one for me, to be honest. These 2 points here, this is more of a double top formation, in my opinion. I don't see anything going on here. Not really, no. I don't see anything going on. But look, guys, can I just touch on a few points I want to leave you with? Let me just go back to Bitcoin. Guys, I hope you can see this chart. Right, so we've clearly reacted off this Quasimodo support, but what happens if we break this, which does happen? We break this, and when I say break this, what I mean is actually close below the head. I don't just mean closing below these lines. Please do take this away from you guys. All right, Daniel, I'll look at that in a minute. Just give me 2 seconds. I just want to get this point across. So we've broken this Quasimodo formation. I mean, decisively broken it. It's a notable close, and we've broken below the heads of the patterns. That's key to understand. You have to break through the head. It's completely erased the patterns, present. So we've broken lower. Do look for this when this webinar finishes, or when you have time. Do look for this to form. So it's just incredible, and it happens so fast sometimes. So look, guys, support turn resistance, resistance turn support. We all know about that, right? So the resistance breaks, we come back, we retest the support, and a lot of traders are looking to buy, right? Exactly the same, exactly the same. But the only difference is we need to make sure the head is taken out of the pattern over here. So decisive break lower. Imagine Bitcoin comes lower, which, I have no idea what it's going to do next. But imagine it comes lower and we retest these bad boys here. Okay, with that, look for possible short entries here because they are so high. I don't really want to say that word high probability, but they're very, very, very reliable. I would say even more reliable than the traditional Quasimodo support that I've just showed you there. Okay, that's how much I really look for these in my analysis. And also, if you get a decisive break, when I say a decisive break, think of a liquidity push. So one candle. So it's a forceful break, and it's something that just completely wiped out any buyers on the Quasimodo pattern. Okay, and we retest that, and there's generally there's some form of reaction. Okay, right, I'm going to show you where. Just give me a second, guys. I've seen one here. This is one here. I hope some of you guys saw this. So, sorry, it's not too straight, but look, this is a very small. This will probably look better on the H4 time frame, but look, for now, it's on the daily time frame. So we have the low, high, low, continued up. It's a fresh level, right? And we did get a bounce. Look, it bounced. I'm not going to go down. I will actually. I'll go down to the lower time frames to see how much that bad boy bounced. Okay, let me just zoom out. Okay, so whoops. So we got a small bounce. There was a small bounce here, right, guys? There. We got a small bounce, but look, it was near enough to the pip again, guys. It was near enough to the pip. Not fantastic, but with trade management skills, you could have potentially got out with a partial profit here, or maybe just a break-even trade. And which, as you guys know, that it happens in trading, right? So for Quasimodo support traders that are long here, that's an ideal target, right? Ideal target. We have the Quasimodo support turned resistance at this point. Turned resistance. As I just explained here, we broke here. We decisively broke here, and we decisively broke here, didn't we? But if you look, we broke the head there, and we actually returned to test it. So that has already been tested. This level's already been tested. So, which means it could be weak. That's why I said we're looking for a liquidity push. We're looking for a strong push to show that there was decisive buying or selling that completely erased any trade, any interest around that level. But here we don't really. Let me zoom in so you guys can see that. Here we don't have that. See, we had the relatively decisive break, but what we have was the retest of the level, and I don't like to see that because that tells me that sellers are potentially weak at this point. So I'd be very wary about this level. This is the point. I would look for additional confirmation to form, Japanese candlesticks, trend line. I would look for, I would even drill down to the lower time frame to see what's happening. Another thing that's very good with Quasimodos, I might add, is the harmonics. Now, newer traders might not have heard of this. Harmonics are the AB equals CD patterns, the BAT patterns, the Gartley patterns. They're really cool. And yeah, the ABCDs are something I use in my analysis all the time. So yeah, do look out for these that converge with these levels. Okay, guys, so okay, I think I've covered quite a bit here. We have some more. I think I might have thrown too much at you guys. I'm not sure. Okay, I was looking from, this is Daniel, I was looking from Feb to now, Aussie dollar. Okay, I'll just ping back over to the Aussie dollar. Feb. Okay, was that on the weekly time frame, Daniel? Sorry about this, guys, just give me a second. 2021. So we're over here. So look, I don't see any Quasimodo pattern here. Yeah, this year. Resistance or support? Quasimodo resistance or support? Possible to go lower. Okay, so you're looking for a Quasimodo resistance. Not sure, Daniel. I'm not sure. I can't see it. Look, I'm going to give you guys my email. I'm going to give you guys my email at the end, my FP Markets email. Please do email me any charts you want me to check out, and I'll give you my opinion on whether it's a valid QM or something you need to work on. Daniel, please do send me your chart if you want me to check that out, because I can't see it at the moment. But what I do see is a possible Quasimodo support here with the trend, because we've been trending higher since like early 2020, right? So we have the low, high, we have the fake out. This is where the fake out, remember? Fake out, we come higher, but what we need to happen is we need to take out that high, right? Low, high, lower, low, higher, high, bang. We have to come down to test this bad boy here, okay? Weaker in January. Okay, so are there any questions that I've missed? I'm sorry if there are. Just give me 1 second, guys. I think I've caught all the questions. Okay. Now, all right, guys, is there anything you don't understand with the Quasimodo? I hope I'm leaving you with a more detailed look. I can go over this again in another webinar. Would you like Quasimodo part 2, where we can just hit the charts and we can go over a full session, just charts, and any questions you guys have, we can just work on that for the full hour. Can I ask a general one on dollar CAD? Of course you can. Quasimodo support or resistance? Bob, you would like another webinar, part 2? That's cool. I mean, we can do a live session on just Quasimodos, and we can try and bring it together with other technical tools as well. So I'll try and find some, well, I won't try, I will find some examples of Quasimodo support and resistances converging with other technical tools that we can possibly use. You know, yeah, I know FP Markets do live sessions, and our plan is to get me involved with these next month, I believe. So we can do that, and with a focus on Quasimodo support. Daniel, I'm not sure I can see what chart you mean. Dollar CAD. Let me just quickly ping over. And I'm having problems with the question thing at the moment. So the question box. Would you follow the trend? Okay, we have another question. Would you follow the trend or wait? Look, Quasimodo supports, this is a perfect example, if that's what you mean, trend. So trend followers can use these. As I said, buy the dips, sell the rallies. So imagine we form Quasimodo here, up, we form a higher high, and then we come down and we buy into this area here. Now, guys, a question. This is a perfect example. So we imagine we rally higher. You know what? Okay, guys, what would you want to see? We have a clear support, a clear supply here that's capped upside since the 18th of May, 2015, right? Incredible area of structure, right? So we break higher. That's a clear sign buyers are interested in this market and taking it higher. Now, if we come down, where would we be looking to buy? We'd be looking to buy around this area here. But a lot of QM traders, should I say, a lot of active buyers will be looking here. This is a good example of where I would be cagey of placing my stop below the head here. This would be very, very difficult in my opinion, very difficult. So I would be looking for areas below this. So just eyeballing it very, very quickly. Sorry guys, just let me ping that on. We have a bit of we have some support and resistance here. You can see very good actually. It's very, very good support and resistance at this point here. So for me personally, I would never look to place stops just that close, unless you can, as I said, drill down to the lower time frames and find something within this area. So look, if you're just trading this as a limit order, please have so as you, if you're just trading this as the limit order, you should always look at your surroundings. And this for me just screams too close, too tight. The stop is too tight for me. So I'll be looking below this support here. One more question we have, please. How do you determine a supply and demand zone? So a supply and demand zone for me is, perfect example here, a supply and demand zone is an area that forcefully broke out of its base. So we form a consolidation. We form a consolidation and we form a notable rally or decline from the area. Very similar to what I was discussing earlier regarding the QM liquidity push. So we're looking for a strong push to show buyers and sellers we're interested, right? With that, we're looking for reactions. So look, sellers are clearly interested in this area, and that's how I determine supply. Look, I can go over this in future webinars, as I said. If there's demand for this Quasimodo support and the resistance, I would say there should be, but you'll be surprised there's not much. It's mainly traditional support and resistance, but yeah, look, guys, if you want me to go for part 2 in this, I'll happily do that, and we can go into more detail, show more setups, and because we all have the basics now, right? We all know the basics, and we can go over some psychology as we go through the charts. Okay, so part 2 would be good. Excellent. Okay, so we'll look at getting that sorted for June sometime, probably the beginning of June, if that sounds good to you guys. Excellent. Part 2, no worries. We can even do a part 3 if this is, because this is probably one of the best ways of determining support and resistance from price action standpoint. Would you recommend, we have a question here, would you recommend CMT level 1? As I've done that, the chart of market technician, CMT level 1, I would wholeheartedly recommend that. But I'm going to warn you, it's not easy. I went into it thinking, because I consider myself quite advanced with price action, and I thought this would be easy. I thought the CMT would be easy. Boy, was I wrong. I was completely, the study it takes is incredible, but the amount of knowledge you get. So yes, the answer to your question is yes. Yeah, the book is 600. The first book is 600 pages. The CMT level 3 is 900 pages. The level 2, the level 2 is 900 pages, and the level 3 one is nearly 1,000 pages. And because I want to understand everything, I'm going through it page by page and writing the bits out that I want to understand fully. It's incredible. It's not easy. It really is not easy, but I would say definitely go for it if you want to advance in this area. It's some people with negative comments with it, but I've had nothing but positive comments from it. Positive experience. I know the guys that when a guy has a CMT after his name, I know he knows what he's talking about. So it's for me, it's what's the word I'm looking for? It's almost like a license, in my opinion. But yeah, Gary Burton, that guy's awesome, right? He does analysis for FP markets as well. He's got the CFTE. I've got the CFTE as well. But what you can do is once you get the CMT levels 1 and 2, you can apply for the CFTE because you've passed them levels. I think that's what Gary's done. But Gary is up there with the best of them. I mean, the guy is just super experienced. I think he's 20, 25 years, 30 years. Excellent guy, full of knowledge. I always watch his, yeah, I enjoy his 4-week course as well. It's fantastic, wasn't it? The guy is full of knowledge, patient, and yeah, I've got nothing but good words to say about the guy. And he's very dedicated to his job, which is great, because you get a lot of traders here that think they understand technical analysis when they clearly don't. They're drawing trend lines incorrectly, and I think it winds him up, Gary. I think he gets angry at this sort of thing when they're drawing it wrong. And you'll see if you follow Gary on his Twitter, you'll see he does point out a lot of traders but when I spoke to Gary last, he said he wasn't going to. He didn't feel that CMT level 3 was for him, so I think he's stuck with what he's got, CFTE. I wasn't sure about the CMT level 3, to be honest, but I've done it now. I've paid for it, so yeah. So I have to go through with it now. But it's really hard work. But yeah, I would recommend it, wholeheartedly recommend it. You can even go for the CFTE. I think they do a course as well. I've only got the CFTE qualification because I completed CMT levels 1 and 2. And believe me, guys, I think the exams are 4 hours. My first exam, I come out of the first exam, the CMT level 1, and I was completely dazed. CMT level 2 is apparently the hardest. I finished CMT level 2, and you have to wait 6 weeks for the results, which is painful, very painful. And I passed them first time, which is a great achievement for me because it's just incredible the amount of knowledge you have to remember. And it's not open book either, guys. Remember this, it's closed book exam. Okay, so you have to really digest the stuff and understand what you're talking about. But yes, so and you'll be surprised at how many traders call themselves technicians when they're really not. They're not using textbook stuff, and it winds me up when I see it. Really winds me up. But I've given up now trying to tell people, because at the end of the day, look, it's all, in all fairness, it is a subjective art, right? So if they're finding something that works for them, fantastic. But I believe if I'm on a webinar with you guys, the same as Gary, I know he follows this. I want to teach you textbook stuff. I don't want to teach you some stuff that I believe that's can work or can't work. I want to teach you stuff that's been used for years and years and years, that's been back tested. I don't want to teach you stuff that's, oh, except the Quasimodo support. That's what I've back tested personally. The Quasimodo support is not in CMT levels 1, 2, or 3. So it's but this is something I really like, and I've found. No, it's not, Daniel. It is only recognised in Australia. Definitely not. It's recognised worldwide, as far as I know, worldwide. Yeah. Okay, guys. Yes, Daniel, I was surprised how few watched it on YouTube, but he's got quite a few. This is Gary Burton's stuff. Guys, do check that out. Do check his analysis out. It's basically only me and Gary that do the technical analysis for FP markets. No one else does the tech stuff for this. Gary, for me, Gary is a master of this art, and I learn something from his stuff all the time. And yes, I did watch his 4-week course, so it was fantastic, and I loved every minute of it. And you can never stop learning, guys, right? And he's one of the best to learn. Yeah, I think Gary's busy, Daniel, trying to reach him for questions. He's actually he trades full time as well. He writes a lot. He writes for Reuters as well, and he's very slow to respond to me as well. So don't worry about it. It's just, but do look, guys, follow his analysis on Twitter. I think he does a weekly report. I don't, Daniel. I can't give out a contact really without his say so, right? So just try and get him through Twitter if you can, and things like that. Yes, you can have my contact, Daniel. I'll give that. Just give me a. Oh, sorry, Garrett, Daniel. Yes. So look, my throat is on fire now. I've spoke for more than an hour. So look, I'm going to wrap things up here, guys. And I know I've thrown quite a lot at you with this Quasimodo support and resistance. We'll do part 2. We'll go over all this stuff again. And look, if you want to get in contact with me at FP Markets, please feel free to send me an email at marketanalyst@fpmarkets.com. I think we're going to put that in the chat. There we go. It's in the chat, guys. So marketanalyst@fpmarkets.com. Ping me over an email, guys, and I'll respond to you. If you want me to check out any QMs on the charts you think maybe possible, but guys, do be aware, I can't give you advice. I cannot say yes, buy here, yes, sell here. It doesn't work like that. I work for a broker. I have to be wary of what I say, so I can help you as far as the education goes. And I can assure you everything I teach you is textbook stuff, and it's yeah. So look, guys, I hope you've enjoyed the webinar. I hope it's been helpful. Yeah, do also make sure to register for FP Markets Telegram channel to get instant updates. Just give me a second. I can see some more questions coming through. Yes, Daniel, thank you for that. Never blame anybody. Never blame anybody. The losses are yours, I say, 100%. But you'll find that many people try to blame you for losses, when trading is it's your own decisions. You got to take responsibility for trading, right? It's you're pulling the trigger, no one else. So that's why I say at the beginning of every webinar I do, I say you have to. really research this. I'm merely giving you an idea here. You have to research this and prove it for yourself. I know it works very well for me in my analysis. So that's all I can give you. That's all I can say, really. Where can I find a recording? You can find a recording on the FP Markets website, through the FP Markets YouTube. Alternatively, FP Markets support team will send you out an email following the conclusion of this webinar. Okay. So guys, I've thoroughly enjoyed teaching this. This is one of my favorite patterns in trading, and I'll look forward to part 2. Yeah, on that note, thank you all so much for taking the time out of your day to attend this presentation. Guys, I hope you've taken something from it. Have a great day, and I'll see you all very, very soon. Thank you very much.